So welcome to this quarter's market update. I normally sit and film this in the Isle of Man with one of our investment managers, Sean Mills, but this time I'm in Jersey, speaking to you from the Jersey office, and I'm joined by John Proudfoot, our Chief Investment Officer here. So welcome, John.
Hi.
And the question I want to kind of ask is, huge amount going on in the world. No one, I think, on the planet has missed that. But how have markets reacted to what's been going on? And how have we then adjusted portfolios to try and deal with the events as they've unfolded?
Yeah, so coming into the year, start of 2026, markets were, pretty strong out of the gate. Economic growth still holding up well. Corporate earnings have been robust, and the market was really looking forward to potential rate cuts, notably in the US, but in the UK and Europe as well, and also support of quite substantial fiscal policy in most regions. So a strong start to the year. Inflation moderating as well, and then obviously we had the outbreak of the conflict between the US and Iran in late February, and that really changed the tone of markets. The closure of the Hormuz Strait in particular, has led to an oil price spike, which then, feeds into a reappraisal of potential inflation, particularly in the near term. And the knock-on effect of that is some reconsideration of likely monetary policy. So going from that expectation of potential cuts to probably most central banks being on pause for the time being, to see the sort of effects feed through and see how that's shaking out with inflation and whether there is scope for rate cuts or not, at this point.
Okay, brilliant. So a lot going on, but in terms of the portfolio activity that we've been undertaking for clients, how, I guess, were we positioned ahead of the time before everything kicked off? And also, how have we reacted since, and how are client portfolios looking at the moment?
Yeah. So, we always try and build diversified, resilient portfolios, but also, very much positioned to participate. And portfolios have been performing, very well to begin the year. Very strong performance in January and February, with a number of our sort of high conviction themes, really performing well. Going into middle late February, we did feel that market sentiment was probably getting a little bit stretched, a little bit frothy, and we did trim back risk somewhat, raised a little bit of cash. And also notable was late last year and early this, we've increased our energy exposure, both in line with our key themes, finding it sort of a compelling investment in and of itself, and also with its potential to be a portfolio hedge, frankly, given that higher energy prices tend to pressure almost every other area of the market. So, we performed well in Jan and Feb, and then in March with the raised levels of cash and also the energy exposure, those have really helped us to navigate March well, preserve capital, and sort of, the balance of those two is that we've performed, very strongly in the first quarter, and we're pleased to have delivered that for clients.
Yeah, no, it's great. I saw a client recently and they were pleasantly surprised, having been a bit nervous as to what their portfolio might look like. So one of the questions they had was, where from now, and what does the sort of future look like? Clearly, with a certain individual in the US, it's very difficult to have a crystal ball, but what do we, look for going forward, and how are we positioning those portfolios to keep that resilient performance?
Yeah, good question. So from this point, what we would be really looking at is obviously how long does the situation with the Strait of Hormuz, persist? When does that open back up and sort of energy and other shipping flows normalize? Looking at monitoring the data closely to see how inflation data is coming through, whether central banks are going to remain on pause or even then look in due course at potential cuts again or not, and that will depend how long that situation persists. But equity markets have been very resilient. They're already rallied back towards near all-time highs in some cases. portfolios, likewise, have rebounded strongly in April after the sort of pullback in March. So, we believe we're positioned well on balance. We've got some dry powder ready to sort of selectively, opportunistically put to work, as we see opportunities and when we feel the time is right, but we're already participating well as it is. And we've got a lot of diversification built into portfolios. Equity risk is well spread geographically. We have some energy and materials and infrastructure exposure because we've been favoring real assets in our allocations. So we feel that we're well set up. We're obviously watching very, very carefully. We're ready to react appropriately. But we think we're, appropriately positioned and the performance is good. So we're in a nice position sort of looking forward.
Great, thank you. So very much steady as she goes in spite of all of the turmoil in the world and lots of reasons to be optimistic as well for clients in their portfolios. Thanks very much.